Welcome back to another video of the Chocolate Stocks, where here we discuss trading strategy, due diligence, and technical analysis on individual stocks as well as the market in general. So if you're looking for a stock, I can help you find a sweet spot. And if this is your first time on the channel, please do me a favor and hit that like and subscribe button. I am on a mission for 1,000 subscribers, and each of you that take that action will help me with the algorithms and help me achieve that goal. Last but not least, I am not a financial advisor. This is not financial advice, so please take what I say with a grain of salt. Let's get into the video. Okay, guys, so I know it has been a tumultuous week we had last week with the market. I mean, everybody's portfolio has been beaten down. I'll show you mine. So here's the public portfolio. I am down big from the week. $700 for the week. Down $1,000, well, $1,200 for the month, and even $400 for the whole 3-month period. With a spike here, almost $6,000 back in January. So, yeah, it's been a beatdown, but I do expect a recovery coming soon. And with that being said, I want to get into the video today about a couple of plays I want to put on your radar going into the next trading week on March 8th. Okay, so first one on the list, I'm going to get straight to the video. First on the list is GEVO, ticker symbol GEVO. Okay, so when I give you these plays, I'm going to tell you 4 things: who they are, why we care. Okay, next, how do we play this? And then last but not least, what is our exit plan? So who are they? GEVO. GEVO is a renewable energy, renewable chemistry and advanced biofuels company headed in unincorporated Dallas County, Colorado, in the Denver-Aurora metropolitan area. The company develops bio-based alternatives to petroleum-based products using a combination of biotechnology and classic chemistry. Okay, so that is who they are. Okay, why do we care? We care because this is an Biden administration clean energy play, all right? We're playing this because Biden administration will head some clean energy initiatives. So what we want to do is we want to get out ahead of this, all right? And another thing why we care is because they are already profitable. If you go ahead and do your due diligence on this company, they are listed as a strong buy. They are listed as a buy in a lot of analyst reports. I think it's a potential upside for this stock. You should definitely do your due diligence, but the reason why it's on the list because it has a high probability of moving rather quickly to try to, offset those losses that you have in your portfolio right now. So now that we know how we're playing this, we're going to play it in the sweet spot as we always do, baby, okay? 590 to 645, that's a nice range. But the thing is, with the volatility of this market, we can't be quite sure exactly where things going to go. But what I can do is try to give you an approximation of how to play it based on what the market does. So let's go to the chart. So here's the one-day chart for GEVO. And as you can see, it started off around $7, sold off to $5.70 for a low, and it recovered for the rest of the day. Still finished in the red, still finished lower than the high at $6.98. So it is currently trading at $6.48 as of close, but in after hours, as you can see, it's been running up a little bit. Now, if you look at the RSI, it is a little bit on the oversold territory. So that tells me that I think I can expect a little of the same that's been happening across the market around the open in this aggressive sell-off early in the trading day and then a gradual recovery. The S&P 500 did that, QQQ did that, and just about every other stock in the market did that. So if we go to the 5-day, on GEVO, as you can see, in the last few days, aggressive sell-off, recovery, aggressive sell-off, recovery. Now it looks like it found a bottom and it's on a bull bounce. We'll monitor that. I do expect some bears to step in on Monday and bring this price action back. Currently after hours is at 758. I do anticipate it coming back to one of these price ranges. If it does run, that's what I put, under $7 if you can get it. The reason why is because we have to think about what we're doing next, okay? So why are we getting into this play? Because we got to think about the exit plan. The exit plan is on the high side that this has a $17 or better price target, okay? So this has a high upside from trading in $5 or $6 to pretty much doubling your money, okay? That is a potential of doubling up. So if you put in $300, you're going to get back $6. You put in $1,000, you're going to get back $2. So this is a high probability play that once it goes back and retests those highs, you'll be at a double from the point you is right now. So that is our exit plan. You consider taking some profit around $12, or you can hold for the $15 breakout. Once again, going back to the chart, if you look at let's look at the month chart to give us a better indication of how the stock's performing. So here's where we are right now. And here is some recent highs around $15. This was back on February 12th. That's not that far away, guys. This has a long way to go back up. So here is a pretty low risk, high reward opportunity for this stock. If you go ahead and get in within that sweet spot, you have the potential to pretty much double up your money. That is a win-win. I'm already in the play. I did buy around $10, so I'm going to average in on this recovery. That way, by the time we reach those highs, we're going to be really in the money. I did see a lot of profit on this, even at my cost range prior to this market correction. So this has a long way to run, high probability, high reward. So I'm keeping moving for the sake of this video. Next one we got on the list, CCL, ticker symbol, CCL, Carnival Cruise Line. You already know who they are, right? One of the most popular cruise lines in the world. That is who they are. Why do we care? We care because it's a hospitality COVID recovery play, okay? COVID is going to be phased out somewhat. We're going to get back to some sort of normalcy. And all of these hospitality plays are the ones that's going to come back. Now, I took a screenshot of a 2-year time span where pre-COVID levels here was trading as high as $72. And as COVID came in, it hit a bottom of $7 at some point. If you can get this at $7, again, my goodness. But I'm going to show you how to play it now. So that is why we care. How do we play this? Play it in the sweet spot, baby, always. So right now, where it's at, it is on an upswing. So we got to try to get it around support levels. Support levels right now is around $26. So if we go to the chart and go to Carnival Cruise Line, and I'm going to go to the daily chart for this, just to show you how it performed last. So again, followed the same suit. Aggressive sell-off in the beginning of the day and in the recovery towards the end. But what is interesting about Carnival Cruise Line is that I see a lot of consolidation in the MACD and even in the RSI, not getting into oversold or overbought territories, right in the middle. Classic consolidation, right around the $26. It finished at $26 for the day, down $1 from the open to high of 27. So again, this is a support level. If you go to the 5-day chart, see where we're at. It did reach a high of $29 back on the 3rd. So this does has a potential to run back up. And if we look even further on the month, as you can see, this has been on an upswing. And when you know about bull runs is that the bulls take the stairs, the bears jump out the window. So this is a stair climb. Which means that if you zoom out even further, and let's take a 5-year time span and just compare where we at. Again, way back in 2018, it hit a high of $72, and then it middled around but it jumped out the window once COVID hit. So at least we know we're at least going to get back here, which is around the $50 range, okay, with a potential of retesting levels. Again, family, what I try to tell you all the time about stocks is all of these price points, they come back into play later on. So again, that's the sweet spot. You want to get it under $26 if it runs 25, 24, if you need pullbacks. Again, we don't know what the market is going to look like, but we should anticipate some of these pullbacks. I just know that these plays had the potential to run up a lot quicker than some of the other long-term plays. Okay, so now that we know how do we play in this, right? Okay, what is our exit plan, Jay? What is the exit plan? The exit plan is consider taking profit around $30, okay? Now, again, going back to the chart, let's go back to a 3-month view. Now, again, we saw just recently it hit a high of $29. It's going to go back and retest that. Now, you can play it for a breakout to see if we hit all-time highs. Well, not all-time highs, but at least recent highs. Right now, the most recent high was $29. We know that's going to be retested. So that's why I'm saying if you're planning for a quick swing trade, look to take your profits around then. I would expect a breakout because these plays are going to go higher. Expect to keep this in your portfolio at least 6 months to a year, okay? Because by the time the summer hit, you want to reap the benefits of that summer earnings report, okay? So by the fall, late fall, where earnings from the summer get reported, that's when you want to look to try to take profits if you're up in these ranges. I do expect it to trade around $50 at some point, but look to take your profit around 30, leave the house money in, and ride that up to the sweet spot. All right. So keeping this moving, I want to keep this video as short as possible. So last but not least, last on the list, ticker symbol DAL, Delta Airlines. Yes. Again, you already know what Delta Airlines is. Now I got to show you, why do we care? Because they're another hospitality sector COVID recovery play, okay? Again, took another screenshot. Pre-COVID high was $63, all right? If I told you, if you go back, it's trading at $46 right now. That is a long way to run. Okay, Jay, so now that we know what the play is and why we care, how do we play it? In the sweet spot as always, okay? Get it around $45, $50, or under $47. Now, again, guys, we're striking to own as much of this as we can, but I understand that a lot of people who may come across this video don't have the type of funds or dry powder to purchase, $450 worth of shares to get 10 shares or better. But a lot of you use Robinhood, and a lot of you use Fidelity, where they do fractional shares. Hey, put a price point on it, okay? If you want to throw $30 on it and ride that and flip your money that way, the thing is, every dollar counts. Every dollar that goes forward is more money for you, okay? Don't be ashamed to play the money that you can afford to play. Only invest what you're willing to lose, all right? So we're just playing the percentages. We're not really playing the prices. We're playing the percentages. Again, when I give you the GEVO play, I'm giving you that play because that's going to double up, okay? That is going to potentially double up whatever you put into it. Same way with these plays. These plays are going to move, all right? So now that we know how do we plan this, what is our exit plan, Jay? Well, let's look at the chart. Let's look at Delta. So ticker symbol DAL. All right. Now, let's go to the 1-day chart just to see what Delta did last. Delta, again, look familiar? Aggressive sell-off, follow the rest of the market, trading sideways. Again, family, I did my due diligence before I came on this video. Trying to let you know these are the plays that's got high probability, low risk, high reward, okay? All right, so started off at $47. Finished a low of 46, dropped off about $1, but again, it is following the same format as the market. It could pull back next week. We don't know if we're out of this correction yet, but this is a great sign. This V bounce is a great sign. And again, you see it over and over again in the market. Okay, going to the 5-day view, we can look and see trading sideways before this nice dip. This nice dip opportunity we got, and then it's trading sideways, looking again at another support level around $46. So again, going back $45.50. If you can get it cheaper than that, great. But try to get this under $47. The reason why is because of our exit plan. Our exit plan, it already has a price target as the moderate buy around $51. So that is already an expectation that this is going to run up some. However, I would say consider taking your profit around $50 if you ride it out into then, or hold for a breakout around 60. Again, going back to the chart, if we look at a wider range of price action, again, it was trading for as high as $63 back in 2019. Okay, 2020 didn't happen. 2021 is here. The hospitality industry is going to boom post-COVID because people have been stuck in the house for a year. People haven't been restricted for a year. People have money because the stimmy checks are coming, and then people are ready to just do things, okay? This is going to be an industry that recovers. You need a ticket. You need a ticket on this on this airlines, with the pun intended. You need a window seat, okay? All right, so that's all I got for you today, people. I hope this video helped you. So if this video helped you in any way, if it gave you a new perspective, if it gave you something to put on your radar, please do me a favor, hit the like and subscribe button. I would really appreciate you helping this channel grow. And with that being said, I'll catch you in the next video. Peace.